In today's video, I'm going to go through 10 tips that will help you make better financial decisions, maximize profits, and make smarter investment decisions. So let's jump straight into it. The first tip is earning money on your idle cash. Now, this is actually a brilliant feature that Trading 212 offers, and compared to many of the other brokers, they are offering a percentage fee here of 5.1%, which is unmatched compared to every other trading platform. What it means is that your money that you have not invested in any stocks or shares yet, you can earn 5.1% AER, and it is paid daily into your account for doing nothing but just holding your cash there. Using a cash ISA. Now, there's a whole debate in the UK, cash ISA, stocks and shares ISA, where do you put your money? Can you mix it? Well, the good thing is Trading 212 now allows you to actually have both as part of your tax allowances per year, meaning not only are you getting the 5.1%, but you're also protected by the financial regulations £85,000 compensation event, which means your money is as safe as it could be. Tip 3 is using the flexibility here. The flexibility is that you can be in a stocks and shares ISA and a cash ISA. Depending on maybe your circumstances, you might prefer to keep your money in cash just to be able to get access to it quickly. This flexibility I personally love. It allows you then to have money in a cash ISA and an ISA for your stocks and shares, meaning if your money is not invested yet, it's safe and it's earning you interest. Tip 4 is a very, very important tip, and it's a tip that I'm going to share my link down below where you can get free shares. If you share your referral link to anybody else, you can get stock shares up to £100. Free money for spreading this great news. People would be even happy to get 5.1% AER. So if you actually share your link, you could get £100 in free shares as well. And that person that you're sharing the link with will be more than happy, I'm sure, to get free shares and free interest of 5.1%. Never mind the fact that they actually invested some of this money, what could they potentially earn? The next tip is using limit orders. It's something that I would preach about in my trading course. It's something that we talk about all the time on the channel. Setting stop losses and limit orders are vital. It really makes a huge difference. If you can avoid, never use market orders. If you use a market order, it is open to the market executing that order. So if the price is at say $10 and you want to buy it at $10, if you hit market order, if that share was to flip say to $11, you could be buying at 11. That's why a market order is very rarely used, in my opinion. A limit order, set it at 10, and eventually it should trigger at 10, meaning you're executing and you're doing your trading based on exactly the price that you want to pay for that stock. That is vital when it comes to swing trading. It is vital just in general. If you're averaging down, you don't want to be paying top dollar. You want to try and get the lowest price possible. This is your friend. Tip 6 is FX fees. Trading 212 announces itself as a free trading platform. We've dived into this before. That is not technically true because you do pay FX fees. You do pay a spread fee, but the FX fee is what we're talking about here. Every trade you open it up, you'll see at the bottom, it will say the FX fee. This is vital, because you will be paying this, and depending on how you're trading and how little you're trading and how much you're trading, this fee could really start adding up. So you need to be sure what type of trade you're opening. Maybe even consider the FX fee currently going. I have opened up trades and you can look back over 6 months and see that you're down 7%. Just based on the price of the dollar to the pound. Now, unfortunately, there's no way of being able to keep your money in dollars. A lot of different platforms like eToro, for example, when you upload your money and change it, it changes once, then it's in dollars, and then it's only when you exchange it out. That way, you're not sort of always subject to the swings. Obviously, like anything, sometimes it could work out in your favor. But over the last year, we've seen the dollar actually go down a lot, so your pound has devalued because of that. The next feature, I would use this daily. It is setting price alerts. So many times I would look at a stock and I wouldn't maybe necessarily want to invest in it, so a limit order isn't applicable here. It's something to more put on my radar. Now, Trading 212 does incorporate TradingView into its systems. I still manually use TradingView. I think it's still the best platform to do your charting on. I set my orders usually through that, but you could also do it through Trading 212. And this is something that I would just jump on my app, and if I'm liking a stock or I feel maybe it's an entry point, or I want to get it on my radar to look at it if it falls to these levels or whatever, I would then set an alert, and that is so easily done, and it just prompts me to look at it such time that the price is around that area. The next feature is automated pies, and effectively an automated pie is like having your own personal ETF without all the crazy fees that you would pay for a management company to hold it. Now, with that, you have to still do your own guidance, you have to do your own due diligence into the companies that you're buying, but it allows you to create a diverse portfolio. Say, for example, you're interested in electric vehicles. You might want to invest in a diverse selection of those stocks, Tesla, NIO, GM Motors, whatever, all these different types of EV plays. You might want to invest in all of them, or perhaps you want to go, I want a bit more in Tesla, but I don't want to be fully in Tesla. I would like maybe a 30% proportion. That's where the pie feature comes in. You can adjust the percentages of your portfolio to suit this pie, and that means on a regular basis, maybe weekly, monthly, whatever suits, you can invest in that pie and it automatically will adjust. That's a great way of having a hands-off approach without thinking about it. Almost, you've done your due diligence at the start. Your long-term investing portfolio is going to be for 5 years. Every month I'm going to invest in this. I know the weight, I know what I've done the due diligence, and it's just a case of uploading money. That way, it stops those idle hands maybe doing a lot of jiggery. The next tip is analyzing the stocks. What I mean by this is Trading 212 offers a lot of support features. It allows you to see what the general feeling is between the community. They'll talk about it. It allows you to check out the hot stocks. You can check which stocks are performing the best. That might be an indication of what stock to invest in. And it does give you a lot of information on the financials, the buy and sell ratings, all of this type of thing. So there's plenty of information within Trading 212 that you should be looking at. And as always, I would recommend doing a further check on anything. Never take one platform or one site as gospel. Always do a double check on things, but this can be a great starting point for you. Like the last point, there's other features in Trading 212 that can help you understand what stock you're investing in. The key ratios that you should be looking at when investing in any stock really should be a PE ratio, a price to earnings ratio. This gives you an idea of how much you're going to be paying for a stock versus their earnings. That is a key metric that most people would use, as at least as a beginner. You should have that on your radar for sure. It'll also give you information such as a dividend. Is it a dividend player? Is it something that you could be earning dividends every single year? And how would that factor into your stock decision? Usually dividend plays tend to either be really, really high because nobody wants a stock, so they have to incentivize people to want to invest in that company. They're risky ones. I'd probably stay away from them. But there is good companies that have great dividends that have been long standing. For example, did you know that Apple has a dividend play? That it seems crazy because it's been growing so much, but there is a small dividend there that could be of interest to you. For example, Nike is another one. Nike, the biggest clothing brand probably in the world, also offers a dividend. These are the types of stocks that maybe you want to invest in because they're good, solid companies for the future. You know you'll get probably a good annual return on average, but at the same time, you will also get a little bit of that profit that you can either reinvest or just take out as a dividend. And there you have it, 10 essential tips that I think everyone should know when using Trading 212. Whether you're a beginner or seasoned vet, it doesn't really matter. These are tips that if you're new to the platform will definitely benefit you. If you found the video informative, if you don't mind, please like and subscribe. I really appreciate everyone that does that. Any questions, feel free to leave them down below, or even maybe another suggestion for a Trading 212 video. Also welcomed. Check out my other Trading 212 videos, and I will see you all in the next one. Peace.